Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 18, 2018, and I thought I'd take a look at sugar today, the ETF being CANE, C-A-N-E. Now, the trends are all pointing to the downside, and as I've been mentioning in most recent deep dives, whenever I get this technical rating that goes left or right, basically it's flat, it's always a clue that something is going to happen to that particular market. And so that's what I want to really focus on here tonight. Sugar is at such low levels right now that it's inconceivable, and I hate to quote the Princess Bride, but it's inconceivable that the market could really fall too much further. So we had a couple of things that did take place here today on our patterns, and we actually had three of them trigger here. We had a doubt, we had a stretch, which is an important one to us, and the pulse. And those three having triggered today lends credence to the fact that the market might actually start to base here a little bit. So let's take a look at sugar. We got daily bars right through here. This is that level that I was speaking about not too long ago when I did a sugar deep dive, that we wanted it to stay above that threshold. It did not. The systems were short and took advantage of it, but we're below that right now at 1108. Now this is the October contract, and so what we want to see is to get above this level, that threshold of 1135. If we can get back above that, then I think we can start to build out a legitimate base here, and sugar might actually have an opportunity to start to head a little bit higher here. I'm seeing some positive nature here. One, you can see from this peak that the market's been in a trend to the downside. Well, just recently you can see these blue dots here on the elastic level. Just the general trend to it is to the upside. So you're seeing some weakish but at least identifiable bullish divergences. That's a good sign. I mentioned that we had a number of pro alerts that triggered here today, and those typically work well for us, especially at this low level. So we're at another point where the market should have some type of a workaround, meaning a base, and the potential for it to actually surge higher. On a weekly bar basis, each of these are weekly bars. You can see that we still have that major support level. In this case, it's 1149 here on the weekly bars. So again, we still have a ways to go. But what's nice is, and this is an early signal, but we're seeing at least the beginnings of an elastic level base here for the oversold condition. This is early, doesn't necessarily mean that the market's going to reverse right away, but it does mean that there's at least some signs that the market wants to base and start to head higher. So what I'm going to tell you is this, is that first, the systems, I just want to show this to sugar. Sugar's got a nice profit out there right now. So do a lot of other markets, but sugar's doing pretty well. And if we actually take a look at sugar now, you're going to see a tremendous hedge that is underway. And I mentioned that we had that technical rating that was flat, and that's always a good sign. Well, another good sign for what's taking place in the market is that we're now starting to see some long positions start to trigger. They're short-term systems, but still they're looking at this base, and they're taking this base that we're in right now, along with the pro alerts. They're taking it seriously that the market actually could base and could start to head higher. So just recently, yesterday, we had a system go long, and then we had another system yesterday go long, and then, well, actually 2 days ago, and then yesterday we had another one that went long. So right now, as we speak, we've got 1, 2, 3, 4 shorts, and 1, 2, 3 longs. So net short one position. Point is that the systems are beginning to hedge those shorts. we're locking in some of that profit. The shorts will hopefully start to unwind themselves here fairly quickly, assuming that the market does base and starts to butt up against those resistance levels that I've been talking about, and we can break above them. Then obviously, well, not obviously, but theoretically, we should have had the shorts unwind themselves and the longs that are starting to establish themselves start to profit. So we're in this flux stage where the systems are going through this elaborate hedging process as we wait for the market to head a little bit higher here. The other thing that I want to point out, these are short-term systems and we're trade oriented, but for those of you that are longer term oriented, if I come back here to the weekly system or the weekly bars here, I think that you might see with the CANE, C-A-N-E ETF, that you might actually be able to get in and have this be a longer term play. I wouldn't necessarily do that with a longer term play just in the futures. Those for my purposes are in out trading, but if you're looking for a longer term play, something you might want to put into like a 401k or some type of a position that you can hold on to it for a period of time, months, you could see the basing here. Could the market head lower? Of course it could, but I think that for the most part that it's run its course. We're at major support. If we take this particular chart and we make it much more scrunched, you can see that the levels of support way back here are 1112. I have another one that's at 1130. The one that just recently triggered is 11. What do we say? 1140, I think it was. In any event, we're at 1108, so we're at substantially low levels. This could find itself to gyrate a little bit, but we could start to see some nice trends start to emerge from this low level. And the fact that the systems are hedging themselves, the fact that we had some of those pro alerts that triggered, those are short-term oriented, but there's that possibility that we're actually seeing a major low here and opportunity to take a longer term play. Could come into play here. So take a look at it. This is going to be on you, your risk, your analyses. I'm just simply giving you the potential for a good longer term play, and you might want to take a serious look at it. So that is tonight's deep dive, and we will take a look at some more markets next week. I'm going to not be doing a deep dive tomorrow, but we'll be back doing them on Monday. So I appreciate it, and we will talk at you next time. Thanks.